We finally got past the holidays. Whoosh! Today I'm going to show you what I believe to be the best moving average for entry triggers and a setup on the Australian dollar Canadian dollar forex pair. Let's get right to it. Hi, this is Tim from TradingStrategyGuides.com. In case you haven't noticed, it seems like I've got this creeping crud again, so I apologize for the raspiness of my voice. We are now 3 days into the new year. Can you believe it? So have you got any New Year's resolutions? I've only got a couple myself. One is to continue the health journey I started in 2018. I've lost over 100 pounds, but I got 60 left to go. It's been tough, but I didn't die. My other one is to get this channel over 100,000 subscribers. I just want to help people find the trading success that I've found. Tell me in the comments what you want to accomplish in 2020 and what I can do to help you get there. I want to hear from you guys, so talk to me. And just so you know, I listen to what you tell me in the comments. I know there's been some confusion about targeting with the options trade strategy, so Casey asked me to keep a watch for a good stock setup so he can do an actual options trade setup that you guys can follow. I'm hoping we'll find something good in the next couple of weeks. Get your options platform set up so you'll be ready. If you're new to options, be sure you set it up for demo or paper trading until you get the hang of it. I'll try to give you some advance notice on the setup. As some of you might already know, I really like moving averages. They let us know at a glance where we've been. And you have to know where you've been to know where you're going, right? I'm going to talk about which moving average I think is the best in a few minutes. I'm also going to show you a nice setup on the Australian dollar Canadian dollar forex pair. We've got a number of charts to look at today, so we'll take care of that first. Then later on, a brand new trading maxim for today. Happy New Year! Remember to click the subscribe button and hit that bell so you don't miss any of these awesome forex trades. All right, let's take a look at our open trades. As I mentioned yesterday, I'm still waiting for this US dollar Mexican peso weekly setup to hit the first target. We made it about halfway, but it keeps popping up and down right here, so we'll get there eventually. The Euro Swissy hit a new low right here earlier today. Stop loss in the second half is still at break even right here, and I'll be moving it with the parabolic SAR when this gets down here below the break even level. I bought this Great British Pound Canadian dollar on the close above the 20 EMA right here. Since it was only 95% volume, it was only a half size position. Then according to the rules, I closed the position when the candle closed back down below the 20 right here for a small loss. I'll continue to watch this and buy it again on a close above the 20 EMA, but be sure to watch the volume and make sure it hits the volume average to re-enter at full size. Here's the gold setup I mentioned in Wednesday's video. I moved the resistance up here to 1526 in the hopes that it wouldn't break on wimpy volume, but it looks like that's exactly what's happening, since the volume at the time of this recording, which is about 9 a.m. New York time, is only about 47%. I don't anticipate we'll get enough volume on this to enter the trade, so I'll be moving the resistance level up to about today's close somewhere, or maybe up to this level right here, and we'll see what happens next week. Of course, if by some stroke of favor the volume reaches 75%, I will enter this trade. I've mentioned this bearish wedge on the Australian dollar US dollar in mid-December, and since we anticipate a bearish wedge to break to the downside, then this push up above the wedge right here kind of blows out our pattern. So we're done with this pattern for right now. And the last chart for this morning is this Kiwi Loonie bearish wedge from last week's video, and it looks like it's breaking today. So watch it. The volume is almost up to the average right here, so it looks like we could actually have a nice trade here. I'll link the video for this setup below so you can take a look at it. Now, before we talk about the Australian dollar, Canadian dollar trade setup, let's talk about moving averages for a minute. There are several different ways to calculate moving averages. I'm mainly concerned with what I consider the two main ways: the simple moving average and the exponentially weighted moving average. They each have a place in the scheme of things. For those of you who are mathy geeks, here are the formulas for calculating each of them. I'm not going to spend a lot of time on these slides, so if you'd like a copy of the formulas, pause the video and do a screenshot. Here's the formula for the simple moving average. And here's the formula for the exponentially weighted moving average. For our purposes, all you really have to know is that the simple moving average gives equal weight to the closing price of each candle in the period. So if you have a 20-period SMA, you add up the closing prices for the last 20 candles and divide the result by 20. The result is that each closing price in the 20-period SMA has a weight of about 5%. On the other hand, the exponentially weighted moving average, or EMA, gives more weight to the closing price of the most recent candle. So the resulting difference is that the EMA responds much more quickly to price movements than the SMA, but the SMA provides a more stable reference value for the purposes of comparing price movements. So which is best? Well, that depends on your purpose. A few weeks ago I showed you a strategy that I call the moving average cross, or MAX strategy. If you've followed this channel for a while, you've probably seen me use it a couple of times. I'll put a link to the strategy video below so you can see the details. In that strategy, I use a long 100-period simple moving average for the purpose of determining the prevailing trend. And I use the 20-period exponential moving average for the trade trigger, which happens when a candle crosses the 20 EMA in the proper direction and closes. I like the 20-period EMA because I get a good trade signal without too many false signals when the price crosses that line. And that, my friends, in my humble opinion, is the best moving average for trade entries. Of course, I do feel the need to say this. Don't take my word for this. Test, test, test. The testing is necessary because no strategy works 100% of the time, and you need confidence that your strategy works so you won't abandon it when you go through a bit of drawdown. All right, let's take a look at the Aussie Loonie trade setup. Here's a nice looking ascending triangle on the daily Australian dollar Canadian dollar chart with the resistance line here at 91.42. An ascending triangle consists of a strong resistance level like this one here, described by these touches of the line. Then you'll want to look for a series of higher lows like this in the form of an uptrend, indicating that traders are less and less likely to allow price to move lower. As the price compresses into this triangle, it puts pressure on the resistance line until it finally breaks explosively. I also confirm these consolidations with a decline in volume and volatility. Remember that perfection and symmetry are not required in these patterns. There will always be outliers and anomalies like this volume bar right here due to news and world events. But as long as the decline continues afterward, I still consider it a good confirmation. Now here's the trade plan. We will buy a daily candle close above the ascending triangle or above 91.42. On the breaking candle, to enter a full-size position, we want to see this volume bar reach up to this volume average. If it doesn't quite reach the average but does at least reach 75% of the average, I will open a half-size position to reduce risk. You can calculate the percentage by dividing this volume number by this volume average, and you should get 0.75 or greater as the result. If you don't get at least 0.75, then stand aside on the trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So let's say this thing breaks right here, and the candle closes right there. That will be your entry point. On that day, look down here at the ATR. Multiply that by 1.5 and measure that distance below the entry, and that will be your stop loss, and measure 1 ATR above the entry, and that will be your first target. If after entering the trade you get a candle that closes back inside the triangle, We'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout above the ascending triangle should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now, these two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this with two positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we'll have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the setup on the Australian dollar, Canadian dollar. Remember what I've said several times over the last couple of weeks. Trading can be whippy due to low liquidity for a few more days until everyone is back at work from the holidays. So be careful and follow your rules strictly. Also remember, my intent here is to tell you how I manage the trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's my intent for the trading maxims, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today we have a brand new maxim from a CrossFit coach that I've been following for some time now. Tim's trading maxim number 65. Never whine, never complain, never make excuses. Kill the critic in your head and weaponize your mind. And this comes from Ben Bergeron. Ben Bergeron is very prominent in the CrossFit community and is the coach for several of the biggest CrossFit Games athletes. I have several of his quotes in my list of maxims. He's very wise and very motivational. I like this quote. I've tried to live this way for many years. The idea is own your actions. Don't blame others. Don't blame the market. Don't blame your parents. Don't blame that guy that cut you off in traffic this morning. Don't even blame yourself. Blame shifting never helps and never works. You alone are responsible for your actions. If you fail, get back up and try again. This applies equally to all areas of your life. Remember our daily Australian dollar, Canadian dollar trade plan here. We're going to buy a daily candle close above the ascending triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And while you're at it, sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 3 or 4 trading picks a week from all different markets and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. And please remember, I want you guys to talk to me. Let me know what your goals for 2020 are. Don't let me down now. You got to let me know so I can help you achieve them. Be sure to comment below. As always, thanks for watching. Thanks for subscribing. Don't forget to hit the thumbs up below. Have a great weekend, and I'll see you next week.